Hey everyone, John and Ray from School of Trade. Today we're going to be taking a look at a short trade here on crude oil. Entry is going to be at 44.86, and I'm looking for a continued move to the downside here from the sellers. Now we have an ascending wedge, very obvious ascending wedge working its way up, and also a very obvious breakout. That candle that just formed is absolutely no joke. Huge amount of bearish pressure in this one, so we're looking for this to want to continue back to the lows. Now, in terms of objectives, if we do get triggered in here at 85, our stop is going to go above this breakout, which means that our target will be equal to that. So if our stop is going to be up here at 45, our target is going to be down here at 44.70, and that's where we're going to be looking to take our overall profit targets. Just a one-to-one trade, nothing fancy, but with this big breakout momentum in the overall downward bias, you can see that we also have a descending wedge zoomed out as well. Big descending wedge. We're looking for this to want to continue down. Bears obviously have control, even though they do look like they're weakening up a little bit in the bigger picture. This last drop, that really kind of tells you the story, right? They obviously mean business here, and they're looking to drive the market back down. So the entry got filled. Now we're looking for a continued move to the downside. Again, you know, in terms of bigger targets, you could be looking for a larger target below at the descending wedge lows on the bigger picture. That would be a bigger term target that you could look for as well. But outside of that, everything lining up really well. Beautiful breakout move that we're getting right now. We don't want to see the bulls come back at all on this, which is why the stop is where it is. You could widen it out a little bit and say, okay, well, you know, I want to give it a little bit of breathing room, so you could go above here at 45.02, or if you're really conservative, you could move it above here and say, I just don't want it to break the highs, right? So 45.06. Either way you trade it, you need to make sure that your target is at least equal to your stop in terms of overall objectives. So the most conservative way is 45.06, which leaves a target at 44.66. So we'll be back in a little bit here and see if we can get this drive down from the sellers. Seeing the sellers pushing aggressively into the lows, this prior swing low that we have here, this is the big level of interest. We want to see price stay underneath this and preferably close underneath it so we can get stronger sentiment to the downside. It's the same thing that we had back here, right? We closed underneath it. The buyers tried to take it back and they failed. I want to see us close underneath this so we can continue maintaining our downside expectations, right? Now, because we've gone so far down, I want to look to reduce the risk. I'm not going to go straight to break even because we haven't hit our target yet, but I do want to lock out a lot of the risk. Well, scratch that, we just hit the target. All right, beautiful pop down there, but reducing the risk there, just knowing that we're close to the objective. The market moved where it's supposed to go in our direction, you know, a good amount. There's no sense in leaving the full risk on. In this case, so quick little slap through the lows, we get the target filled, and you'd see where it started bouncing, right? Right off of that descending wedge low. Beautiful drop lower, and just a perfect example of when you have that clear of a breakout, everybody's going to see it, and that usually results in a pretty strong and fast move. So that's going to do it for this one. If you have any questions about it, feel free to send an email into School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.